So I was mentioning, we received cash for $4,950. We had a $50 discount on this. The second thing that we're going to be doing, and I can't remember the exact account name, I believe it's discount. What's the
Sales discount.
sales discount? Thank you. Sales discount for $50. And we are going to be crediting accounts receivable for $5,000. So these two transactions, I'll just put it up here, are related to each other. The first one was when we made the sale and they owed us a bunch of money. The second one is when they actually paid it. So like what you were asking is what do we do with that discount earlier, is when they actually paid it, then we put it into the discount account. Yeah, I haven't seen the entire questions or gone through it yet, so we're going to be going through this together. Okay. Then, are there any other concerns about this one? The next one is that we are returning merchandise to Ledcor, $800 worth. Oh, thank you. Sorry. The next one is that we paid somebody for 5 days' work at the rate of $345 per day. So we have a expense. Thank you. December 10th. Wages expense. Can somebody please do that math for me?
1,725.
Thank you. Wages expense 1,725, and I'm assuming we paid cash. Luckily for us, we don't have to deal with taxes, so it's a straightforward transaction. Okay, so that one's a fairly straightforward one. Let's do the 14th. This one is when we actually return merchandise to Ledcor. In this case, it should just be that we are debiting accounts payable because we, oh, yes, McKenna?
Is wages expense different than salaries expense?
So usually salaries and wages, the difference between them is wages is somebody that works at an hourly rate with variable hours. So think somebody like maybe they're working in a restaurant. And salary is somebody with the set amount of pay every year. So realistically, if you were to get them mixed up, it doesn't matter. But that's a technical difference.
I think in the accounting terms, wages expense are the ones that has job we call blue collar jobs where you do physical thing.
Okay.
But when you say salaries expense, these are the administrative persons like accountants, such managers and stuff.
I didn't know that distinction, so appreciate you sharing. Evan tells me that if I had any questions about accounting or if I was having trouble solving any of the problems, you were the guy to ask. So it sounds like that's actually good to know. Thank you. So we have on December 14th, debiting accounts payable because we don't owe that money. Just to refresh everybody, that was the fact that we're returning a bunch of inventory. And we are going to be crediting inventory. Does that one make sense? All right. We also had something similar on December 17th to the question we did before. We're just purchasing supplies on credit. So that's December 17th. We purchased $1,200 worth of supplies on credit from 111 Supplies. So
Supplies inventory.
yeah. Supplies usually infers or implies that it's like office supplies. And we are going to be crediting accounts payable. Then we have another similar question to what we did before when we made a sale with a discount term. We have purchased $9,500 of merchandise from Ledcor with the terms of a 1% discount if paid within 10 days and the remainder due within 30 days. But much like we did before, we don't know when that payment is going to be made. Yeah, McKenna?
On December 14th,
Mm-hmm.
I'm confused as to why it's accounts payable.
So I'm just going to quickly back up here. I was just asked about December 14th, this transaction right now, returned $800 worth of merchandise to Ledcor, and why we are debiting an accounts payable account. So when we did that transaction, we owed them money. We just haven't paid for it yet, so we credited our accounts payable account. And then when we returned the inventory, well, we're not paying for it anymore. So we're debiting the accounts payable to say, well, we're not paying for this anymore.
I think what's confusing too is that we're missing the actual transaction
Exactly.
purchase from Ledcor. We don't actually have that here at all.
Yeah. I think we actually have it after, later on, the one that we're about to do.
Yeah.
Again, I'm doing these questions with you guys for the first time, so we'll try to we'll try to do things as they come up, but that's a good question, because the accounts payable just means that we're not paying them anymore, and we just have to pretend we had a transaction before that point. So on December 20th, we purchased $9,500 worth of merchandise from Ledcor with some terms. And all we're going to be doing is we are going to be debiting merchandise inventory. And we got $9,500 worth. And we're going to be crediting,
Accounts payable.
thank you, I just lost my head. Accounts payable for $9,500. And we bought inventory. And then we could even write the terms out if we want. And again, you might be wondering, well, don't we have that discount we're probably going to be getting in a bit? You know, we get a 1% discount if we pay it within 10 days. How come we're not doing that here? And once again, just like we did the last time when we bought something, we don't know yet whether or not we're going to get that discount. We don't know whether or not we're paying it within the 10 days. So when we pay off our bill, that's when we'll get our discount and journalize it.
How do you know it went into accounts payable?
Sorry?
How do you know it went into accounts payable?
Because if they have payment terms on them, That just implies that it was on credit.
Yeah.
So that,
Yeah.
oh, I see.
Yeah, if you have
And-
terms, it wasn't paid for out.
And most of the time when it comes to like these accounting exams or accounting assignments, almost everything is done on credit anyways, so accounts payable, accounts receivable, it's not too common for it to be paid with cash.
Okay, so these things are terms, 10%. What's FOB?
Freight on board, it tells you, so that tells you, it's a term of a contract which tells you when possession passes from the seller to the buyer. It's not something that we need, I think there are some particular accounting treatments for this, and I can't recall the exact treatments for them. For our purposes though, the freight on board just tells us that when it gets shipped, it now belongs to the buyer. And the reason that matters legally is just because what if something happens to those goods in transit? Like what if there's a car accident and the truck flips over and destroys all the goods? If it belongs to the buyer, sorry, they're out of luck. But if it's still the seller's and it hasn't transferred yet, now it's the seller's problem.
Yeah.
So when we see these terms, it's just assume it's accounts payable.
Yeah, so if we see terms, just assume that it's accounts payable, like 1, 10, and 30. That
Okay.
they'll be
That
there.
helps a lot.
Yeah.
So, I was just getting a little confused as to.
Yeah.
We did go over an example last week where the FOB actually mattered because there's some change to the shipping charge and we had to journalize that.
Got it.
Yeah, and I can't remember those exact details right now, so I'm going to gloss over it.
Yeah. Thank you.
No, thank you for clarifying. Then December 22nd, called the customer and let them know you'd reach out after the holidays about a potential $5,200 sale. Do we have a transaction here?
No.
All right. That's a trick question. Sold 200, so on December 29th, sold 200 units of merchandise for $6,800 to Lendrum Sales, cost of goods $2,200. And we have, again, terms, 1%, it's going to be accounts receivable, and returns 1% if paid within 10 days, everything due within 30. So once again, this is going to be a does anybody need anything on here before I take this off? Okay. So once again, we're going to have 2 transactions. We have our, where is the top here? Here we go. December 29th. It should be accounts receivable that we are debiting.
He said he'll also accept pay on
Will he?
it. Yeah.
That'll make life easier. Thank you. I'm just writing everything out because I don't know how particular Evan wants you folks to get in your accounts.
He'll point
And
out what he'll accept on our exam.
Okay. I know in mine I'm fairly loose because I don't mind, I like people just getting on with their lives, but others want the full description. Accounts receivable, 6,800. Then we have revenue or sales revenue of 6,800. That's an 8. And then we have the second part of the transaction. So that was a sale. We made a sale here, $6,800. We got that revenue. Then we have the cost of goods sold for $2,200. And we are going to be crediting our inventory. So that was basically the exact same transaction that we had before. Any concerns with it? Then we have December 31st, reimbursed Aster Terrain's business automobile expenses of 1,600 kilometers at $1.60 per kilometer.
$2,560.
Thank you. Now, I'm not sure if Evan has a shareholder's loan account or if he just wants you to do a cash and an automobile expense. Let me double check his trial balances here. Because there are loan accounts in some cases.
I think it'll just be cash.
He just wants it cash? Okay, thank you. So we have automobile expense. Which we have, what did you say it was again, Riley?
2,560.
Thank you. And we're going to be crediting cash. Okay. Reimbursed. Auto expense. And last we have December 31st. We have Aster withdrew $800 cash from the business. So we have withdrawals, Aster Terrain, and we are crediting cash. And that was for $800. Questions, concerns, thoughts? All right, let's take 5 minutes here.